the world is evolving, actually, I think, even more closely to what we expected. Because we expected a lot of traditional auto manufacturers to see the writing on the wall and rush as quickly as they could into scaling big time into electric vehicles. And what has happened recently? Both GM and Ford have said, we're stepping back. We're not going to do this until it's profitable. The problem with that is, in order to be profitable, they need to scale. That's how this works. These are learning curves that they are riding down, and those are expressed in cost decline. So the fact that they're pulling back means there's more share for Tesla and others who choose to go for it.
And Kathy, I want to keep the conversation going on Elon Musk, but I want to bring it to the ARK Venture Fund. Of course, it's not an ETF. You invest in private companies, et cetera, in there. And you take a look at the portfolio, you have SpaceX in there, and you also have X, formerly known as Twitter. And in July, you had told the Wall Street Journal that you had written down your Twitter stake by 47%. Fill us in on the past couple of months. Have you written it down further, or how has that changed?
No, I think it's still there. We have to be very careful. This is an interval fund. It is a 40 Act fund, and we have to mark to market every day. The good news is our clients can get in and have access to these amazing companies for just $500, and they get quarterly liquidity. So that's the good news. The markdowns are simply, if we see in the secondary market employee stock trading at a steep discount, we have to take that into account. If we see others in the more traditional asset management world, like Fidelity and others, marking their holdings down, we need to take that into consideration during our daily mark to market. So it's an abundance of caution. We have a 5-year investment time horizon. Do we think that's where X belongs in terms of valuations? Absolutely not. Absolutely not. A roughly $20-ish billion valuation for what we believe truly will become the everything app. Think WeChat Pay. Elon started his entrepreneurial career in the payments industry, and he's been thinking about this for a long time. He now has money transmitter licenses in more than half of all of the states, which we learned on Twitter Spaces, or on X Spaces, I should say, the other day when we had our interview with him. So that's exciting. He's going for it.
He's going for it. We'll see if that one lands. But let's talk a little bit more about the private markets, because obviously the private credit market has gotten a lot of attention right now. You're looking at the private markets through this interval fund that you have. When you think about the opportunities there on that 5-year horizon that you have, do you see more so in the public markets or in the private markets right now?
Now that we've had this very nice run this year, we think the answer to that question is in the private markets. They're close. They're close. What's fascinating to us is that the public markets have been leading the private markets for the past 3 years. As our funds were falling in 21, private valuations were going to all-time highs, along with the NASDAQ. They were taking their cues, I suppose, from the NASDAQ. But real innovation, if you looked at our portfolios, was starting to revalue to the downside, and even more so in 2022. We are still seeing major down rounds taking place in the private markets, and I'm always surprised at this sort of thing, because you would think that the private markets lead the public markets. That has not been the case in the last few years.
Hey, Kathy, I've got to be honest with you. I think whenever we think about Elon Musk, brilliant, but also erratic. And I'm curious how you think about Elon, the individuals, versus Elon, the companies he's creating, the things he's doing. Because I think if there is time, any other CEO of a major publicly held company would, I think it's safe to say, not be able to get away with a lot of what he has done. So help us, educate us, how you make sense of it, of someone you have followed, talked with for many years.
Well, first of all, very often we just look at what he does, not exactly what he's saying, which can often be a distraction, or it can be an advertisement for his cars or for X or for SpaceX and so forth. So, but we have a scoring system as we are evaluating companies and their founders and their management teams. And there are 6 metrics, and one of them is moat and barriers to entry. And I think Elon is a maestro of raising barriers to entry with innovation, that is so much faster than anyone else. Why? Because he's so first principles, physics driven in his analysis of how to approach a new idea, a big idea.
So tell me this then, Kathy. I mean, if you look at the cohort of the CEOs that you back, Brian Armstrong, does he hit that bar? Is he above Elon, or is he at the money? You've got Elon, you've got Brian, you've got Tony Wood at Roku. Does anybody come close to Elon, or is Brian Armstrong maybe even at the money with Elon or above?
Well, we don't actually look at the world that way, one relative to the other in terms of management teams. We do look from our scoring system at the scores, which include moat, management, people and culture, execution, valuation, that might surprise people, and product and service leadership, and thesis risk. Those are the 6 scores. And all 3 of them score very highly. Which one scores the highest? They're actually very close to one another, to be honest.
They're very close to one another. So, I mean, obviously, Coinbase is one of your key holdings. We've talked a little bit about that. The other feature that we want to talk about is AI. I'm curious to know, in OpenAI, the valuations have ranged between 80 billion to 100 billion. Will you take a position in OpenAI? Is that going to be part of your holdings as you explore the next development of AI in your holdings? Well,
in our private portfolios, we are already exposed to Anthropic, which has been a major beneficiary of the drama around OpenAI that we all witnessed a few months ago. But if you look at GPT-4, which is the latest large language model that OpenAI has published, it is way above others in terms of performance. So there you have it, the pros and the cons. So we can't tell you what we're going to do in that portfolio, but we are so impressed.
Does innovation have a destination, or is it a continuous journey? A question to ponder as we delve into the visionary world of ARK Invest, a firm that has made a name for itself by betting on the future. ARK Invest, under the stewardship of Catherine Wood, has been a beacon of foresight in an otherwise murky financial landscape. From its inception in 2014, ARK has been a trailblazer, recognizing and investing in disruptive innovation that has the potential to change the world as we know it. Their vision is clear: to identify large-scale investment opportunities in the public markets resulting from technological innovations centered around DNA sequencing, robotics, artificial intelligence, energy storage, and blockchain technology. They believe these key areas of innovation are the stepping stones to a future that is not only technologically advanced, but also economically prosperous and environmentally sustainable. ARK's philosophy is deeply rooted in the belief that innovation is key to growth. They've built an open research ecosystem designed to identify disruptive innovation at its earliest stages. This ecosystem combines top-down and bottom-up research, aiming to identify innovation and convergence across markets. The team at ARK Invest is not just investing in companies, they're investing in ideas in the future. They see beyond the present towards a world where precision medicine can cure diseases at their genetic root, where autonomous electric vehicles reduce carbon emissions and revolutionize transport, where robotics and automation enhance productivity, and where blockchain technology ensures secure and transparent transactions. So, what are the key points of ARK Invest's vision for the future? First, they believe in the transformative potential of disruptive technologies, and this belief forms the cornerstone of their investment strategy. Second, their open research ecosystem is designed to identify and understand innovation at its earliest stages, a strategy that has often led them to invest in companies long before they became household names. And third, they're not just looking at individual technologies, but at the convergence of these technologies and how this convergence can lead to exponential growth and societal transformation. In conclusion, the vision of ARK Invest is not just about predicting the future, but actively participating in its creation. They're not just investors, but visionaries looking beyond the horizon to the opportunities that disruptive innovation can bring. This is the world according to ARK Invest, a world where the future is not something to be feared, but something to be embraced, a world where innovation drives progress and where progress brings prosperity.
ARK Invest doesn't stop at healthcare. They set their sights on programmable biology platforms. These platforms, designed to craft novel agricultural and materials solutions, could become a $40 billion industry by 2030, boasting a remarkable 70% gross margin. Now, shift gears with us as we explore the electrifying landscape of energy storage. Declining battery costs are igniting a revolution in electric mobility systems, from micromobility to robotaxis and aerial transport. Imagine a future where robotaxis traverse 13 trillion miles globally by 2030, generating revenue with operating margins as high as 50%. It's not just a vision, it's a potential reality. In the stationary storage realm, demand could mirror that of electric vehicles, both segments contributing a staggering $300 billion each annually in battery revenue. As oil demand wanes in the face of electrification, the transformation of energy storage reshapes the contours of industries. But that's not all. ARK Invest speculates that generative AI models like ChatGPT will redefine search engines by 2030. The dominant search model might shift from keyword-based to conversational, expanding the market from $150 billion today to a monumental $1 trillion. Prepare for a revolution in how we interact with information. Cryptocurrencies, the heralds of decentralized finance, could reshape the very foundations of our monetary systems. ARK Invest foresees a future where digital scarcity and transparent proof of ownership enable cryptocurrencies to displace centrally controlled currencies. By 2040, smart contracts may migrate most contracts onto blockchain protocols, potentially collapsing contract execution costs and challenging the roles of financial intermediaries. Peer into the crystal ball of 2030, and ARK envisions cryptocurrencies constituting a remarkable 10% of the money supply, potentially displacing 40% of gold's market share. The power of smart contracts is projected to secure 5% of global financial assets, paving the way for a revolutionary shift in financial dynamics. Now let's shift our gaze to the evolving landscape of digital leisure. ARK Invest anticipates a seismic shift in spending habits, with digital leisure poised to claim a significant share from traditional options. Picture this: connected TV advertising, social commerce on platforms like Facebook and Instagram, sports betting, AI-assisted video game creation platforms such as Roblox, and potentially AI-enabled wearable computing hardware driving digital revenue spending to reach a staggering $23 trillion by 2030. It's not merely a shift, it's a digital revolution, but that's not the end of our odyssey. ARK Invest dives deep into the transformative potential of smart contracts, envisioning them as the backbone of an internet-native financial system. Solutions like stablecoins and tokenized treasuries gained traction post the crypto crisis of 2022. Brace yourselves for a financial landscape where the market value of decentralized finance applications, fueled by smart contracts, could soar to an astonishing $5.2 trillion by 2030, growing at an impressive 32% annually. As we sail through these uncharted waters, it's evident that vertical software companies are harnessing the power of digital wallets to build two-sided networks between consumers and merchants. The closed-loop ecosystems they create might accelerate revenue growth to a whopping 33% annually, reaching $50 billion by 2030.
Exploring the potential and challenges each presents. In the realm of medicine, precision therapies are the new beacon of hope. Picture gene editing and RNA medicines rewriting the narrative of previously untreatable diseases. By 2030, these therapies could account for a quarter of all new drugs, injecting a breathtaking $700 billion into the industry's revenue stream. The enterprise value of precision therapy companies could appreciate by 26% annually, reaching a monumental $4.5 trillion. Switching lanes now, consider the electrically charged landscape of electric vehicles or EVs. It's not merely a trend, but a seismic transformation. As EV battery costs decline, electric vehicle sales could represent a staggering 95 to 100% of all vehicle sales by 2030. But this metamorphosis carries a challenge. Traditional automakers grapple with scaling EV production profitably, setting the stage for potential consolidation in the industry. Moving on to the captivating realm of robotics, where the convergence of AI software and hardware is yielding generalizable robotics, operating cost-effectively in unstructured environments. This market opportunity could be worth a mind-boggling $24 trillion or more. And then, there are robotaxis, autonomous vehicles transforming urban travel. These platforms could generate an astonishing $28 trillion in enterprise value over the next 5 to 10 years. Autonomous vehicles are not just reshaping urban travel, but also supply chain dynamics. They could potentially slash costs by a staggering 15 times over the next decade, creating a $900 billion industry by 2030. Now, cast your gaze upwards to the celestial expanse. Reusable rockets are propelling us into a new era of space exploration. The dramatic reduction in launch costs opens up possibilities. Satellite connectivity revenues projected to reach an astronomical $130 billion by 2030. Hypersonic travel, once confined to the realm of sci-fi, could generate a remarkable $35 billion in revenues. And in the midst of all this innovation, 3D printing is making waves too. In the automotive realm, it's reducing part counts and slashing product development timelines. In healthcare, it's enabling customized medical procedures like the world's first eye transplant. The overall 3D printing market could grow at a staggering 40% annually, reaching $180 billion in revenues by 2030.
The future is a fascinating landscape, teeming with potential and brimming with opportunities. As we open our minds to the possibilities, we uncover the potential of digital leisure, a growing market that ARK Invest has pegged at a whopping $23 trillion. As technology continues to evolve, we witness the advent of virtual experiences that blur the lines between reality and digital realms. These digital interactions, powered by augmented and virtual reality, form the bedrock of tomorrow's leisure activities. But the journey doesn't end there. Imagine a world where fleets of robotaxis roam our city streets, reducing the cost of transport and increasing accessibility for all. ARK Invest sees this as a soon-to-be reality, with a potential market capitalization of $28 trillion. The rise of autonomous vehicles has the potential to revolutionize the way we commute, making travel more efficient, affordable, and safer. Next, we explore the realm of autonomous logistics. This sector, projected to reach $900 billion, stands to disrupt traditional supply chains. With the rise of autonomous vehicles and drones, the logistics industry is set to undergo a complete overhaul, enhancing efficiency and reducing costs. And finally, we cast our gaze towards the burgeoning 3D printing market. Expected to skyrocket to $180 billion, 3D printing technology is set to revolutionize manufacturing, construction, and even healthcare sectors. The ability to create intricate designs and custom parts at a fraction of the cost and time is a game changer, opening up new avenues for innovation and growth. In summary, we have traversed a landscape filled with immense potential and exciting opportunities. From technological convergence to digital leisure, from robotaxis to autonomous logistics, and the ever-expanding 3D printing market, the future of technology and investments is not just promising, it's groundbreaking. The world as we know it is transforming at a rapid pace. And with ARK Invest's visionary insights, we are better prepared to navigate this dynamic landscape. The future beckons, and it's up to us to seize the opportunities it presents. So, stay curious, stay informed, and most importantly, stay invested. Because the future, dear friends, is closer than we think. Until next time, this is InvestMinder, signing off.